Hey everybody, and welcome to Stock Abilities. I'm going to be covering why I believe that Tesla is a red herring for the likely crash of the stock market. Now, I'm not expecting 2008 like a crash, as I'm thinking more like a 10 to 17% pullback. And kind of why I'm thinking that, I'm going to go into in this video, so make sure to watch through till the very end. And don't forget to comment and subscribe to the channel and like this video for more videos just like this, but we're going to jump right into it here. I'm just going to be doing some cross comparing of Yahoo here. Yahoo was yeah, I'm sure a lot of you are familiar, a relatively big tech company back in the 90s, and it went up and up and up in valuation. Stock market was all excited about it. It was booming. We had a lot of excitement going into Yahoo, a lot of excitement going into other search engines like Google, and then, the booms of social media like Facebook and MySpace and all that fun stuff. And as you can see, they sort of started to kind of boom really, really big when they initially IPO'd in 1996, and then they just kind of pushed up and up more and more. They were getting such great valuations, they were acquiring such great companies, and then they hit an all-time high basically after a few splits here and there in 2000. Everybody was excited about it. It was a great company, and they were all willing to be like, hey, look, Yahoo is the future. And this cross comparison with Tesla, it's very, very similar that you're getting that same kind of mindset. That Tesla is EV, Tesla is the future for all of these different things, like insurance and like solar and all those fun things. But the cross comparison here is that they both got added to the S&P for inclusion. Now, something to factor in is that when a Yahoo did that, they only got added basically within I don't know, 3 to 4 months, something like that, that they ultimately ended up crashing. They did not last very long. They did expand a lot, multiple years, but then eventually they came to an ultimate downfall, which is the complete collapse there. As some might argue was, a tech bubble, some might argue financial crisis, what have you, but ultimately they ended up fading and crashing after multiple acquisitions, and then the S&P inclusion just dumped them completely. They've still been kind of floating around, but they lost significant evaluations after that crash. Going into just a little bit more here, this blank page that seems to be taking forever here, but essentially, they were getting literally billions and billions of valuations. Everybody was all excited about it. They're all hyping it all up, multiple billions of dollars of valuation. Tesla is very, very similar. Tesla is getting almost to the trillions of dollars of valuation, despite the fact that Yahoo was actually more profitable than Tesla when it was even at these valuations. Now you got to factor in inflation, you got to factor in all these other fun things. A lot of people are trying to, try to get in a little bit of piece of this or that with it. And, Yahoo continued to acquire companies. Yahoo continued to grow a little bit. They started with, not much valuation now, burst into a big bubble. Sorry about that. As this valuation shows you that it goes from, billions to multiple billions to almost nothing after a crush from the tech bubble. And then, rejections from other companies, and then it faded into obscurity as Verizon ended up acquiring it, and then it got passed around to other hands here and there. You know, uh, Essentially, they refused to sell to other people. They didn't really have a direction. They were kind of like Blockbuster. They didn't want to adapt much to change. They said, hey, we're doing so good, we're dominating, nothing to be done. Google showed them that there's a lot of changes that could have been done. Just simplifying it. Yahoo came off more as kind of like a spammy search interface. But, they've acquired all these companies, and ultimately it meant nothing because they got into such an absurd valuation in their tech bubble that it was pretty much unsustainable. No one's going to buy up there with that valuation in that regard. And this is kind of what Tesla is getting to at this point, is essentially just that. Let me show you guys here. Tesla is here, trying to push and push and push. And it's, as Bloomberg is saying, it's game over. You're getting the same kind of thing as Yahoo here. You're getting the same kind of structure. The hype isn't as much on the tech end this time, though. It's on EV, it's on insurance, it's on multiple markets. And the problem with Elon is he's in so many markets. So with Tesla, he's jumping around and he's causing havoc, in my opinion, across these multiple markets. And each one is basically a seed investing over and over and over again. They're pumping things up, but they're not bringing in much revenue. Tesla is ultimately, it's bringing in a lot of revenue, but the net profit is not very much. They are pretty much, in my opinion, still more or less a net loss company. You're valuing a company that struggles to make billions. It's barely making millions, valued at almost $1 trillion valuation. But where are they going to go from there? What is the future for that? How big of a bubble is this going to get? Is this going to last a couple more months, a couple more weeks? You have all these big tech earnings coming up, and how is that even going to come into play here too? Tesla's earnings are tomorrow, or if you're watching this, already happened. And as you can see, S&P inclusion, hit a little bit of a harsh decline there when it got included, but then it went back up and now it's up way, way more. But where does the valuation stop and where does the bubble begin? I believe it's right around the corner because, just cross comparatively with Yahoo, you get all of these hype, you get all this excitement, you get all these acquisitions they're doing and all this expansion and all this futurism. The media is a little bit too bullish on a company 2-3 years back that they were just bashing continually. So you got to go with the media on this one, that you flip around the other direction there, that they're getting all bullish, they're all excited about the Tesla and its future and how it's going to grow more and more and more. I'm not saying it necessarily won't, but at this valuation it's getting absurd. This is a pre-split valuation here. We're looking at ridiculous billions and billions of dollars of valuation here. We're looking at literally $883 a share, and I believe it was a 4-for-1 split or a 5-for-1 split very recently. So we're looking at like a valuation almost in the Amazon pricing here, for a basically beyond Amazon pricing at this point pre-split. And they haven't really gotten that, they shouldn't really deserve that valuation. They're not really profitable like Amazon. They're not really profitable like some other companies. They have a lot going for them in the future. They have these batteries, they have EV, they have, commercial vehicles coming up, Tesla Jet, smart home stuff. They have a lot going for them, but they're just not bringing in the real profits here. They're struggling to bring those profits in. Now you got a company like Amazon who's actually making substantial profit. And then you have Tesla and Amazon in the same valuation, despite the fact that Amazon is a legitimately growing company over time that has a good, stable profit. Whereas Tesla, you just don't get that. You have other companies here. You have Apple and you have Facebook. And uh, just as a cross comparison here with another company here, just to give you an idea of the potential bubble aspect here, that MicroStrategy Incorporated had a bit of a bubble here back pre-tech bubble. They're doing the same thing again. They're even prepping to expect a rather big dump. Whether there's a little bit more to this market pushing up, we might carry into 2022, might last a little bit longer than the 3 to 4 months from, basically when Apple was, or not Apple, when Yahoo was there pushing those peaks, and everybody was excited about Yahoo. There's other comparative stocks. As a reference here, we've had a Trump with his excitement about casino stocks. He ran the very similar thing to what Elon's running now, and a lot of these other tech companies are running. They're hitting a kind of absurd valuation. And does this necessarily mean that this is the end for them? I would say not necessarily, but I feel that a rather more substantial crash is coming. I don't feel that 2020's drop in March was necessarily a big enough drop, and I feel it recovered a little bit too quickly, which is a little bit suspicious for the markets. But I guess ultimately we'll see in the end how this all shakes out. Personally, to me, just looking at Yahoo, just looking at Tesla, just looking at all of Trump's casino stocks and a lot of these other tickers, that it all seems to be shaking out to built up momentum and way too much hype for a potential crash incoming here very soon. A lot of these other companies started going on the rise, and they're getting these valuations from a closed down economy. I believe that when we actually start opening up again is when, ironically, the real crash is likely to happen, because they've been throttled and abused, and all this expectations, and everybody's excited about it, and that in the end it's ultimately just a big dump upcoming. But this is just my opinion. Feel free to share in the comments below your opinion on what you feel about Tesla, its S&P inclusion, and how you feel it'll shake out for the markets. Thanks for listening in, guys, and have a nice day, or night, or morning, depending on when you're watching this. See you later.